Good morning, everybody. Today is the seventh day in the month of July 2022. My name is Heritage Adisa, Markets Analyst at HFM Nigeria. And as always, we check through the markets, find out what the overall sentiment is, find out what the drivers are that are moving asset prices, maybe price opportunities, and then how we can take advantage of it. But please remember that this is just a communication material and nothing in this communication contains or should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. And what we have this morning in terms of the overall market environment, yes, it's a better risk environment. Yesterday we had mostly that Dow environment still remaining. On Tuesday was a full-blown risk-off environment. On Monday, some lackluster movements there on the back of the July 4th US independence holiday, right? But so far today, we're seeing some improvement after risk assets are falling heavily all through the week, right? We're seeing some form of you know improvement basically. And then I had this written down earlier. I said risk sentiment improves, but don't forget that we're not out of the woods just yet. In terms of the catalyst, the reasons for the improvement, it's not like the negatives has changed. That's one. Those ones still remain very much in play. But yes, there was positive trade balance data for Australia. There's that. But I mean, you talk about the COVID cases in China, it's getting worse. It's getting worse. Now, there's also reports I just saw a few minutes ago that the UK Prime Minister is set to also resign. So that's also bad as well. So the negatives still remain, it's still there. So I don't want us getting carried away, right? Risk assets take a breather this morning following strong downsides this week. And although they still trade very close to the lows, right, sentiment fares better to start the day. Equities trade on the positive side, although the gains are not so sizable. You look at something like US 500 and it's only up about 0.26 percent so far today, right? So there's that to pay attention to. Commodities, yes, a bit higher so far today as well. Paring back some of the losses for this week. Bond yields broadly high, although you look at the Swiss 10-year and Japanese 10-year as well, those ones are still on the downside, right? Clearly, their own currencies are also weaker on the day as well, so that's not really a surprise. But generally, bond yields are broadly higher. Metals volatility trade a bit mixed as well, so that still says how about your more patience. I wrote this. I said the negative drivers that have seen markets or risk assets fall over the last couple of sessions have not changed, right? Recession fears continues to mount, right? The UK loses more ministers and now even set to even lose its PM, right? And that clearly increases political tension. So there's that. Europe's gas supply worries as well is still there. There's still rationing of gas, so there's still that worry and that stress. And even the COVID cases in China, right, is getting even worse again after that slowdown we had a couple of weeks back. So there is that. But for now, market sentiment still holds up, but don't get carried away is my point. Now, yesterday we also had the latest FOMC meeting minutes where they basically didn't change, nothing much changed, not much of a surprise. The context still between a 50 basis point hike and a 75 basis point hike in the next meeting, but clearly it's a hike. Inflation is still the major focus, even though it slowed down or they're willing to, accommodate some slowdown in the economy. So clearly there's still that to pay attention to. Apart from that, we also had Australia's May trade balance. Now that was actually a very good trend around the highest on record, right? Which is good. Clearly puts AUD part of the strongest currencies so far today. That is also supported by higher commodity prices, right? Pounds and NZD are also amongst the strongest currencies so far today. Commodity prices supporting the NZD for the British pound, though, with the whole political here and there, I'm not feeling, that strength that we're seeing so far, but that's what we have on board, and then we cannot really rule that out. But at the end of the day, it's about what we can see, right? There's that. And then on the other hand, on the weaker side of the leaderboard, you have the likes of the dollar, for example, the likes of the Japanese yen, even the Swiss franc, right, sitting at the bottom, which more or less points to a better, a more improved risk-on environment, even though, the basis for it are still very much shaky, right? Quickly looking across board, starting with the equities, for example, right? Now, this is US 500 here. Let's just get this down a bit. And this is US 500 here, right? Yes, just gently higher above, where we started the day, close to yesterday's highs. But I mean, we're still well within yesterday's ranges, still struggling around this 38.5, 38.50 level, right? Which is still, one that wants to still be very, very cautious about. Now, yes, sentiment has improved. If you can see equities continue to push higher like this, pushing higher, then clearly that would support even the high beta currencies, commodity currencies even better. But in the meantime, with the lackluster movement that we're seeing, with the positive and negative drivers here and there, with negatives even overshadowing, but risk assets not really aligning, it makes it a bit tricky to try and jump into what we're seeing right now. But it's what we're seeing, and it's really the same story, across other equity spaces, right? Now, Japanese index clearly has moved up quite a margin, beating through yesterday's highs, right? Even more or less the highs for the week already, right? So there's that to pay attention to. JPY is amongst the laggards, so it's not really that much of a surprise, right? So we have that, but you look at Japanese 10-year yields also down. So there's still that good and bad, bittersweet taste, right, in the amount of market so far. So have that at the back of our minds. For oil prices, we're still very much well below this $100 per barrel level on the US oil. Yes, slight, more or less, we are back on flat levels so far today. I don't think we are out of the woods just yet. We had massive downturn on Tuesday, Wednesday, and right now we're still at flat levels. I don't think, talking about, yes, supply constraints, yes, should support prices, but then we're talking about entering into global economic recession that would clearly affect demand. There is also lockdown in China as well that affects demand. So there's really that supply stress and then demand stress. So for now, for oil prices, how about we just take a more muted stance on that particular front? Copper continues to, trade lackluster, flat as well on the day as well. Yes, back retesting yesterday's highs, right? But I mean, at the end of the day, you look at where we are trading, still, well below this 3.5 level. We're unable to break through that level to the upside. So clearly, there's also that to also pay attention to. Now, you probably want to look at the strength and weakness of currencies and where we are right now, right? But a quick one that I want to look at USD CAD, for example. Yes, we're moving lower, down about 0.30% so far today, but the margins are small, just like what we had yesterday in terms of the overall moves, right? Yes, we've broken through yesterday's lows eventually, but we're still struggling very close to this 1.3. So that makes it a bit more a message to try and chase. But it's what we have really, is what we're seeing. You look at something like AUD USD, yes, it's moved higher as well today, but we are still failing to break through yesterday's highs, right? It's still struggling around the lows, really, right, for the entire trend that we've had over the last couple of weeks, right? Yes, we've bounced off this key area of support around, let's see this, around 0.67600, thereabouts. We've tested it about 4 times already, and we've moved higher. Heading into Friday, end of the week, after such massive moves for the week, yes, more profit taking could come in play, right? We also have NFP tomorrow as well. Yes, all of that are things to watch out for. But even having said all of those things, I think the entire environment, yes, being negative is still tricky. I feel like being more patient is a good way to go about this. Which other ones here? Let's look at JPY quickly. On the JPY side, JPY is one of the laggards in today's session. So JPY crosses are mostly higher. The likes of even pounds JPY really is up a bit in today's session. This is AUD JPY, for example. In today's session, we're moving higher. Let's clean this up. All right, up so far today, we've broken through yesterday's highs around this is 92.5. We're heading for the next 93.00 level, which is also a very interesting level going back to the 27th of June, as well as even the 23rd of June as well. Now, right there, some resistance could come in around there. Higher commodity prices, yes, should support AUD. The good data from Australia in terms of trade balance supports the AUD as well. Better risk sentiment supports the AUD. Slightly higher equity towards the AUD. But in terms of convictions, right, it's something I'm really reluctant to try and chase. So that's that about that. And USD CAD as well. Yes, up above yesterday's high. So generally looking to pierce strength versus weakness, the commodity currencies versus the safe haven assets is one you want to look out for. But in terms of convictions, in terms of the reasons and catalysts behind them, it's still quite scarce, quite low. And then I'll be more patient in trying to chase this. On the calendar today, yes, we have ECB meeting minutes, on schedule. That's a monetary policy meeting accounts right on schedule. I'd like to see what they have to say. They've already said that next month, or this month rather, they're looking to hike interest rate by 25 basis points. So let's see if that's still the case. If there are talks for 50 basis points, what's the concern about the gas supplies? What's the issue with economic recession coming in? So there's that to look out for. And then we also have jobless claims for the US. And then even a couple of central bank speakers. For Fed, you have the Fed Bullard and Wooler on the wires. And then you have BOE Peel as well on the wires. Now, I'm still a bull on the dollar. I've not really changed that stance. I think this the whole environment from the risk of side supports the dollar, global recession supports the dollar, high inflation, central bank tightening supports the USD. All of that is still a positive factor for the dollar. Now it's moved up a lot in this week already, right? Especially when you look at the move from Tuesday. So nothing says you can't really pull back or have some profit taken from where we are, but I'm still holding on my bullish bias on the likes of the dollar. All right, so that's it for now. Thank you very much. If you have any questions, please do not hesitate to ask. I would always do our best to help. Thank you. Do enjoy the rest of the trading session. Bye for now.